Good evening, everybody. This is Barry Parker for Capital Link Shipping, and it's my pleasure to be interviewing Eddie Valentis, who's the CEO of Pyxis Tankers, which is on the NASDQ, and the symbol is PXS. So, Eddie, welcome.
Barry, nice to see you again.
Yeah, nice to see you. Yeah, it's a busy week. There's a lot of conferences and a lot of activities going on. Pyxis is a small company with 6 vessels, 4 of which are MR tankers, product tankers of around little under 50,000 deadweight each. So one very curious thing during the week at one of the presentations, maybe at the Capital Link conference earlier in the week, somebody was pointing out that the MRs are actually, at this point in time, in the middle of March, are actually earning more per day than all the other classes of tankers. And it occurred to me, we'll try to invent a cliche that a rising VLCC lifts all other sectors, but maybe that's not the same for an MR. In other words, if the MRs are leading the pack, maybe the investors don't respect that as much as if the VLCCs were earning some big headline number and then everything else would be seen more favorably. I'm just curious what you think about that.
Yeah, I mean, in periods of volatility, it is the stability that the medium range sector gives you is substantial, and it's not today what's happening today, and actually, you're right, the rates are above what the VLs are earning today for an MR. It's been throughout since 2008, 2009, after the bad years for tankers, the MR rates have been stable. And this is what made us decide back in 2007, when we entered the product tanker sector. It's the stability and the prospects that the medium range sector is providing, and therefore we wanted to be a company which will be taking advantage and taking vessels in that sector in order to grow and become a big player in the sector.
Well, let's follow up on that. With the MRs that you have, I think they're all on time charter at this point, and they get off roughly around the middle of the year. Maybe not all at the same time, but do you have a view that the second half of the year might be better than the first half of the year in 2018?
Yeah, I mean, yes. Every year we sort of believe that the second half will be better, and this has been repeated by many of us. But this year we believe really the fundamentals are pointing towards a better market in 2018. Specifically Q3 we think would be stronger. The reasons for that is pure supply and demand equation. Supply is coming substantially down. I mean, we estimate the delivery schedule for the next couple of years in the region of 2.8% annually, and the demand for refined products is projected to be in the region of 3%. So there's a balance over there, and we expect arbitrage opportunities to come back in the market as inventories are drawing down, as inventories are coming down to their 5-year average, and drawdowns are even stronger in the year. Therefore, arbitrage will come back in the trading opportunities. Arbitrage will come back in the market, and therefore we will see more trading for the products, for refined products.
Well, let me ask you about the arbitrage. This is a chance for me to learn something, because you know a lot about it, being in the sector. In other sectors, you have demand for shipping, and it's very clear there's a certain number of tons of something are going to move, and you can figure out an estimated demand curve. But with the arbitrages, sometimes when the window opens up, all of a sudden it's demand that you don't know about. Like today, we don't know that maybe a month from now something is going to be happening in the North Atlantic, on one side or the other, which means there's a lot of gasoline cargoes moving one way or another. I mean, how can you factor that into your planning at all, other than saying seasonality or talking about the inventories? Is there a way to get at that?
Not really. We cannot do that. Maybe other people who follow arbitrage closer and have cargoes, they can do that. They can monitor the arbitrage opportunities better. The only thing that we can say for sure is that as inventories are coming down, there are more trading opportunities, and this is creating more arbitrage trading in the refined product space. We've seen the good market back in 2014-15 for tankers, and specifically products were doing very well back then, with spot rates reaching up to 22,000, and TC rates around 17,000, 18,000. And this was driven back then purely to a lot of trading activity and substantial arbitrage trading, which was happening back these years. Therefore, we believe that in a scenario where inventories are coming down, arbitrage trading will come back. And this is what is important for us at this stage, considering that, as we mentioned earlier, we believe the market will be a little volatile in the next quarter, and this is the reason we fixed our vessels on period until at least June this year. The average rate that we booked our vessels is in the region of 15,000.
That's pretty healthy, and that's pretty good compared to the historical high you mentioned on time charter.
That's a very good average, considering that 1 year TC today for an MR is in the region of 14,000, and considering that the spot rates for MRs are varying depending where the vessel is, from 6,000 up to 11,000, 12,000. So it's a good rate, a comfortable rate, and we have visibility for cash flows for at least June this year, and we strongly believe that Q3 will be strong for products. The demand-supply situation, which I explained earlier, is kicking in, and therefore we are expecting a good market from Q3 this year.
So when the vessels come off, do you have a strategy? You're going to leave them spot while the market is really strong, or you'll time charter them out, or you're not sure yet?
We're not sure yet. Usually, in the past couple of years, let me tell you about our older unit, the 2006 build, which is a non-eco vessel, non-eco mod vessel. The vessel has been period chartered by Shell, and this charter has been extending for 6 months. So if Shell comes back and wants the vessel, we will definitely consider to give it the vessel back to Shell. And if the rate makes sense, if we consider that the spot market is extremely strong and we should take advantage of that, we will do that. But in any case, the company has a balanced chartering strategy. We always want to have both vessels on time charters and vessels in the spot market, and this is how we will continue working in the future. This is how we want the strategy to be when the company grows.
Okay. Eddie, let me shift gears for just a little bit. I know in the past year, I think you raised a small amount of equity, and I think you refinanced some debt recently. I wonder if you can talk about just what plans you have in mind to change the company's financial contours.
Yeah, the purpose of being public is to be able to raise equity from time to time. Unfortunately, market conditions for shipping have been difficult. Capital markets have been almost closed for the past 2 years. Therefore, since we became public October 2015, we have not been able to raise any equity from the capital markets. We did that. We found an opportunity end of last year when we issued 2.4 million shares, and we raised close to 5 million. With the proceeds of that, we had an opportunity to refinance 3 of our loans from a bank which was exiting shipping. And we got a very good discount actually, and this was a very good transaction because we gave a lot of value to stockholders. We will always focus to improve the company's financials. We will always focus to find good deals that make sense for the company. That transaction made sense because we issued stock at a little bit above NAV back then. And this transaction, which was a substantial discount, as a result, we have an appreciation of the NAV of the company. So the NAV per share has increased to approximately 20 cents per share.
So it's accretive to the NAV.
It's accretive to the NAV, and it's an accretive transaction for the company and the shareholders. And this is how we want to move forward. We want to do transactions that make sense. We understand that we're a small company.
Well, this week, you know, I mentioned there have been a lot of conferences and there are a lot of presentations and going on. And one of the questions that comes up is people talk about small companies versus large companies. There's no right or wrong answer here, but I'm just curious. You're a small company. Just your view of the benefits of that.
We're today a small company. we hope that soon we will be able to grow when the market gives us the opportunity. That's a big question, and obviously everybody's thinking about the bigger company. But the advantages of being a small company is that, you know, first of all, we're growth oriented. So every change in the company is affecting the results.
It's magnifying.
It's magnifying.
Yeah.
I mean, even 1 or 2 vessels make a difference for us. It's a vessel. The investor is growing together with the company, and this is very, very important. Our operating expenses, although being a small company, are comparable to bigger companies. So we have a very competitive structure, which compares to any company out there, and I'm talking about the publicly listed companies. Our charters, we have a very good chartering strategy. I mean, currently, as we said earlier, the charters, the average of the MRs in the region of 15,000, considering that the 1-year TC is at 14,000 and the spot rates are in the region of average 10,000, 11,000. So we think we're beating the market by a substantial premium here.
Sure.
And most importantly, we have a big chunk of the shares. Therefore, management is aligned, right? Is totally aligned with the interests of the shareholders. So this is very important, and we're keeping a very close eye, a very close control of the company, of the costs, and we really want to make accretive growth for the company and therefore benefit all shareholders.
Okay. The path always it's always going to be in MR tankers, or not necessarily?
That is the focus now, the MRs. We want to build a strong fleet in the MR segment. We very much believe in the segment. We very much believe in the prospects of the MR, and we want to focus on that segment now.
Okay, but going forward, so for the growth we're going to see, the path of growth is going to be within that segment.
Within that segment, correct. Subject, of course, to capital markets being there and providing us with accretive equity, and therefore allowing us to grow the company the way we would like the company to grow.
Okay. As I said, I've been at many presentations and conferences this week. The questions come up. So I think you mentioned the order book as a percentage of the fleet is extraordinarily low. So we have coming up, we have ballast water treatment, which some people have suggested is going to lead to quite a bit of scrapping in the sector. Do you have a view on that?
Yeah, definitely I have a view. I mean, you know, considering that about 10% of the fleet by year 2019, 2020 will be in the region of 20 years of age. It is a major consideration for owners that have these vessels to take them through the 4th special survey and in addition to add the ballast water treatment system, which for us, for an MR, is in the region of a cost of in the region of $750,000. So it's a substantial capex. In addition to that, you have, of course, the low sulfur regulation, which is coming in 2020.
Well,
but
that's the next question.
Yes, that's the next thing. But as far as the ballast water treatment system is concerned, this is a done deal. No more extensions. 19 is the year which we will have to comply unless we have extensions from the U.S. Coast Guard. So therefore, everybody should be planning to install the ballast water treatment system. Now, if an owner has a vessel of 20 years of age, would he be doing that investment plus the cost of a dry docking, the fourth special survey, etc., which is a substantial cost? That's a big question, and this has to be supported by the market. If the market supports such an investment, maybe some of these units will continue operate. But if not, we must assume that it doesn't make commercial sense for an owner to keep these vessels in the market.
But you're talking about other people's. Your oldest, just to clarify for the viewers, your oldest MR, I think, is 12 years old.
It's 12 years old.
Yeah. Okay. So you're talking about other.
We're talking about the 10%, which will be approaching its the fourth special survey.
Yeah. Okay.
Our vessel will be at the third special survey, our oldest unit at that time. So it will have another minimum of 80 years of operating.
So one way or another, you're going to put ballast water treatment.
Exactly.
On
so at that stage, all things considered, yes, you still have a visibility as to when you can pay down for this cost in the course of the remaining life of the vessel.
All right, we'll finish up with a question that probably doesn't have an easy answer. The answer about fuel, again, much talked about 2020. It's less than 2 years from now. My view going around, listening to people talking, some from the shipping companies, some who are analysts, consultants. It's just all over the place. It's not clear that scrubbers is the right answer. It's not clear that fuel availability is uncertain. So just a lot of unknowns. A lot of folks who are talking about it are just saying we're gonna wait till late 2019 and figure out what the numbers are then. How is Pyxis approaching that?
Yeah, I mean, we're very cautious about the issue. We're trying to find out and trying to understand how things will work after January 2020. Definitely for an MR, it's fitting a scrubber is not an option, and I don't think a lot of owners are considering fitting scrubbers in MRs. Besides the heavy cost, I don't think many MRs can fit these systems because they don't have the space in the engine room. So it's a very big technical issue, and therefore I don't think the scrubber, at least for medium-sized vessels or small-sized vessel, is an option. Therefore, what we are hoping for is that maybe refineries will come up with a product which will comply, and therefore, in order to have a fuel oil which will be cheaper at that time and not depend only on marine gas oil or the ULSD in order to go forward. But there could be a benefit out of that. I mean, most small vessels, medium vessels will switch to marine gas oil at least until there is a new fuel. And we believe that many owners will decide to slow steam, and many charterers will decide to slow steam their vessels in order to avoid the high consumptions.
Which has it's an unintended benefit for the market.
Which will have a benefit in the market. And a rough estimation now, and this is very rough. If you decrease speed by 10 to 15%, then there will be an additional demand for up to 60 to 80 MR vessels. So this is just a brief calculation of what will be needed in case all the fleet starts slow steaming reducing speed by 10 to 15%.
So that would work in your favor, really.
That would work
in a big way.
In a big way.
Yeah.
Plus, there will have to be movements of the marine gas oil or the new fuel to other ports to be consumed. So MR will be the size to be benefiting also from the carriage of the marine gas oil.
Because the fuel has to be supplied in different places than it is now.
Exactly.
Well, that's probably a whole other interview, maybe for another day. So I think we'll wrap it up here.
Yeah.
Let's say thank you for coming on, and I look forward. Next time we're going to talk about some of those new trade routes and all those ton miles.
I'm sure we will have more news to say in the next meeting, and I'm sure we will know a little more about the sulfur situation and how it will develop for 2020.
Look forward to chatting with you, Eddie.
Thank you, Barry.
Thank you.
Appreciate it.